Hello, welcome to the European Open Briefing for Thursday, November the 23rd. I'm Rafi Barajan, currency analyst at XM.com, and we're going to be looking at what's happening in the currency markets today. So it's a fairly quiet day. We have both the US and Japanese markets closed today. The US is shut for Thanksgiving, but we are seeing some moves. Yesterday, the Fed's FOMC minutes of the October-November policy meeting did show some surprisingly dovish views on inflation. That led to a fresh sell-off for the dollar, giving other currencies a boost. The pound is at a 6-week high, though the pound was also boosted by the UK budget that we saw yesterday. The Kiwi did see a bit of a lift from retail sales figures out of New Zealand, and the Canadian dollar is currently trading near 1.5-week highs. And we have Canadian retail sales numbers due later in the day. The euro is also up this morning. We had PMI numbers, but let's begin now with the dollar. We can see dollar index and dollar yen pretty much in line, falling to fresh lows. The dollar yen is at a 2-month low, 111.05. The dollar index has dropped to 1-month low, 93.12. Yesterday's Fed minutes were actually expected to be a non-event, given that we knew that the Fed wants to raise rates in December, and everybody expected the minutes to signal a December move. That did happen. The minutes did say that a near-term rate hike is needed. So it's pretty much certain that we will see a rate hike next month in the Fed funds rate. But it will be interesting to see what the updated FOMC projections will reveal at the December meeting in terms of the dot plot chart as to how many rate hikes we should expect in 2018 and 2019. There were some surprisingly dovish remarks about inflation. The minutes said many participants observed, however, that continued low readings on inflation might reflect not only transitory factors, but also the influence of developments that could prove more persistent. So as Fed Chair Janet Yellen was saying early in the day yesterday, when she was speaking at New York University, the Fed is becoming increasingly uncertain that the current low inflation patch is temporary, and the doves within the Fed actually want to see further evidence of inflation rising before they commit to raising rates further. So that could mean that the FOMC projections in December will reflect a much less aggressive rate hike path for the coming few years. We also had disappointing durable goods numbers yesterday out of the US, so that did also weigh on the greenback a little bit. And the dollar pullback did lift gold prices. Yesterday they rose to just below $1,295 an ounce. We can see that gold prices have since drifted lower, but overall, though, in the medium term, at least gold prices are looking fairly neutral and stuck within a fairly narrow range. But the euro, on the other hand, is benefiting from renewed optimism once again about the Eurozone economy. And of course, a weaker dollar also helping the single currency as well. The euro has hit a 1-week high of $1.1846 this morning. We had the Eurozone flash PMIs, the composite PMI index hit a 6.5-year high of 57.5 in November. So we are seeing more and more evidence that the Eurozone economy is gaining momentum and is one of the bright spots in the global economy at the moment. And the ECB will also publish its meeting minutes of the October meeting later today. That could be interesting as well, because the October decisions to scale back the QE but keep it open-ended, that was not unanimous. So we should see how much support there is within the governing council for maintaining this ultra-loose monetary policy into 2018, because if we do see stronger than expected opposition to that, it would signal that QE is highly unlikely to be extended beyond September 2018. Moving on to the UK pound now, and like the euro, the pound is also doing well this morning. It hit a 6-week high of 1.3336 against the greenback. Yesterday we had the UK budget. Philip Hammond, the UK finance minister, unveiled his latest budget decisions. He increased spending by £25 billion, giving a boost to housing, the transport, businesses and the health service. This is all expected to give the UK growth a bit of a boost, especially at a time when the UK economy is slowing from the Brexit uncertainty and the squeeze on consumer power, given that UK incomes haven't been rising as fast as living costs. But of course, the medium-term focus remains very much on the Brexit talks, with the December EU summit being a very crucial for UK pound and for the Brexit talks, which will determine whether or not those talks will progress onto trade, because the continued uncertainty is there are signs that it is having increasingly negative impact on UK businesses. Now that we're seeing global growth gathering pace, the UK economy is one of the few exceptions that we're seeing growth slowing down there. Let's have a look at the Australian and New Zealand dollars now, because they also headed high yesterday as the US dollar fell. We're seeing the Aussie, actually both the Aussie and the Kiwi are at 1 week highs. The Aussie hit 0.7624 and the Kiwi reached 68.6893 against the greenback. The gains were somewhat limited though, because both Aussie and Kiwi yields did fall in line with US yields, so that did kind of reduce the premium for the two currencies against the dollar. The Kiwi did jump higher also after we saw better than expected retail sales numbers out of New Zealand, though overall the data was on the soft side, so we did see the Kiwi retreating soon after that spike here to 0.6893. It's currently trading around 0.6880. We have New Zealand trade data coming up later this evening or tomorrow morning, depending on your time zone, and you can see retail sales, they were up by just 0.2%. That was slightly better than forecast of 0.1%. Year on year though was not too bad at 4.1% in the third quarter. And we're also going to have retail sales numbers out of Canada later today. That could indicate whether or not the Bank of Canada is close to raising rates again in the coming months. The loonie is also doing well this morning. It's at a 1.5-week high of 1.2679 against the dollar. We can see that the inverse relationship between USD CAD and oil prices once again appears to be in place. We did see a bit of a divergence in that relationship as the loonie was mostly being affected by monetary policy outlook and the NAFTA talks. The NAFTA talks are still clouding the outlook for the loonie, but at the moment we can see USD CAD has dropped to a 1.5-week low. Oil prices, on the other hand, hit a fresh 2-year high yesterday. US crude prices were boosted by a shutdown of an oil pipeline between Canada and the US, so that's expected to be temporary. Focus though later today, as I said, is the retail sales numbers out of Canada and the ECB monetary policy meeting minutes as well. That's due at 12:30 GMT. We can see the Eurozone PMI data here. The composite PMI, which combines services and manufacturing, bit even the top expectations coming in at 57.5. Forecasts were 56. We've got the second release of the UK GDP for the third quarter due later, as well as Canadian retail sales and that New Zealand trade numbers. That's it from me. Thank you very much for watching and have a great day.